Hey, hang on, give me a second. Running a little bit late today. Turn on the light. Oh, come on. There we go. Hi, everybody. Welcome to Thursday. It is April 17th, 2025, midway through April. And, welcome to the Financial Thing Livestream. How's everybody doing? How's everybody doing out there? Sorry, I'm a little, I was running a bit late. And I realized it's 7:30 p.m. and I gotta get on the stream, blah, blah, blah. So here we are. And no outside view camera today because I didn't have time to set it up. But there is not a cloud in the sky, and I think it's let's see how warm it is. 28 degrees Celsius today. Bright and sunny, bright and sunny. What are we going to talk about today? Or this evening for everybody in the UK. We're going to talk about peer-to-peer lending. Yeah. What do you want to know about peer-to-peer lending? Well, I'm going to tell you my my top 4 peer-to-peer lending sites right now. This is the updated version. I realize that I do have an old version of this that for everybody who is on the email list can download, but I haven't updated it since I think April of 2023. I'll turn this light up a little bit. There we go. So somebody had emailed and said, hey, how can I get the top 5 list? And I thought, well, I'm updating the top 5 document, plus I'll just go over it live here today, show you where I'm at. Because somebody has fallen off the top 5 list out of our usual top 5 suspects. I'll tell you who that is. But in the meantime, if you can hit the thumbs up, I really appreciate that. And subscribe if you're not subscribed to the stream. Do so. Subscribe to the channel. Yes. Quick hello to everybody in the chat. Invest24. Invest24. Welcome to the stream. You used to be Invest22. Oh, I see. You're back after having surgery. You've been recovering for 14 months. Pleased to see everyone here still going strong. Well, welcome, Invest24. New and improved Invest24. I hope you're healing up well, whatever surgery you had. I know surgeries can be challenging sometimes. I've had 2 of them myself. Thankfully, nothing serious, but no fun nonetheless. So welcome back. AccuChap is here in the famous Accrington. Colin Perry in the Peak District. Peter Vince is here from a very mainly sunny, although slightly chilly Leatherhead. I wish it was chilly here. It's a bit warm today, but welcome, Peter Vince. Hello, Alan Stratford. And Chimpo Naughty is here, of course, in Cambridge. See, good memory. 52 years old. Look at that. Memory's still strong sometimes. Not always. So we're going to talk about top 4 peer-to-peer lending companies for April 2025. Why top 4? Why not top 5? I'll tell you when we go through it. I'll tell you why not top 5. Look at the Trading 212 portfolio as the stock market continues to be bipolar, throwing out all kind of mixed signals. Reminds me of the first girl I ever tried to date. She threw me a lot of mixed signals too, just like the stock market. Go through some couple of questions from the mailbag. I think it's going to be a short stream this evening, even though I always say that. But let's get right into it, yeah? Hopefully you can hear me well. Yes. Okay. Let's pull up the screen share. Should we just start with the should we start with the top 4 companies? Let's just start with that. There isn't any there's no news today. I've looked around and there's not really much peer-to-peer lending news. It's all quiet. Everything is quiet in the peer-to-peer lending world. But I do have a couple of bits. Actually, let's start with this. Let's start with Cufflink. They've hit the over £400 million invested milestone. They've surpassed £400 million invested through the Cufflink platform. This is more than just a number, Cufflink says. It represents the scale of what has been built together with the investor community and Cufflink itself, and the impact that continues to grow with each new investment. Cufflink says, whether you've been with us from the beginning or joined recently, this milestone is a shared achievement. We couldn't be more excited. This milestone also sets the stage for what's next. We're entering a new phase of growth, innovation, and expansion with exciting opportunities. New products and enhancements are in the pipeline. Exciting, right? As we are pausing to celebrate this achievement in the Easter holiday, please take note of the new office hours. They're going to be closed from the 18th to the 21st of April, back on the 22nd of April. So if you want to get a hold of Cufflink, they're not going to be there during that time. So congrats to Cufflink for hitting £400 million invested in the platform. Been quite a journey for them. Moving on, there was a update from Funding Secure about what they have agreed with the courts to allow a interim distribution of money that is being held on the platform. The court has said they can distribute 92.5% of funds held on all loans which were made prior to April 2019, and 60% of funds held for loans made after April 2019. The balance will be held pending the hearing of the application made by the investor's representative, which will determine the allocation of the settlement sum and the associated costs and expenses in the Quist close trust claim. The platform may be unavailable whilst the wallets are updated. This exercise is due to take place over the next few working days with the intention that it will be completed by the 25th of April 2025. Therefore, withdrawals will be processed on Tuesday the 29th of April and Wednesday the 7th of May, and then each Wednesday thereafter until further notice. If you have any questions, you can contact Lisa Eden at lisaeden@fundingsecure.com in the first instance. So there you go, right? This is a great example of when a peer-to-peer company goes busto and then they say, well, we'll have our administration wrapped up in 2-3 years. Yes, Funding Secure is a great example of just how long it takes to get an administration through, and that's still not finished. This has been April 2019, so we are now 6 years to the month. 6 years administration has been going on, and likely will not be wrapped up probably for another 6 years. And in the meantime, who will be paying the price for all those administrative fees? It will be you and I, the loan holders. So, administrations do not move quickly. Case in point. Okay, let's do the top 4 peer-to-peer lending companies. There shouldn't be too many surprises, but there is one company that has been taken off, which I can no longer recommend. I'll tell you why. There is one new addition on the top 4 list. And I'm going to start this up and show you what's going on. Look at this. Look at that pretty slideshow that I've created for you. I hope you're excited about this. I'm excited. Such a nice day today. Gosh. I wish I could show... I should show you the outside. Should I show you the outside? Do you want to see the outside? Just before we get started. Hang on. Let's see if this works. see if this works. Look at that. I'm gonna show you what it looks like outside. Can you see that? There we go. Beautiful day. There's no clouds in the sky today. Somebody's painting their door out there. There's a bird just flying in the sky. So there you go. That's how we do it. Showed you live. Anyway, back to the top 4 peer-to-peer lending company list. Here we go. Number 1. Drum roll. LoanPad. No surprise here. You know that I've been a big fan of LoanPad for a while. I've been invested in them in their loans for a long time. Now at this point, I think I can't remember how long it's been, 5 years, 6 years. Why do we like LoanPad? Well, they now have 20 lending partners that they work with to provide property-backed peer-to-peer lending loans in the UK. Increased interest rates. I don't know why it says that, because that is not true. Well, I guess it depends from where they started at. I mean, they started at 3.5% and 4.5%. So now you can get 6.2 and 5.2%. So 5.2 in the classic account, 6.2 in the premium account with 60 days notice. The investment continues to do what it says on the tin. So they've always promised a very simple investment through LoanPad, which they continue to offer. Only 2 products you can choose on is very simple. I like simplicity. Auto lend. I don't have to choose anything. I don't have to really spend any time monitoring the investment. Just put the money in. The interest rolls over when it hits £10. Reinvest if you wanted to do that. Or you can pay out yourself the interest. Brilliant liquidity. This, of course, is not always guaranteed, but LoanPad continues to offer less than 1 day liquidity if you choose to exit from, say, the classic account, or you want to give 60-day notice on the premium account. The liquidity still remains to be good or excellent. I mean, it's probably the best liquidity in peer-to-peer lending. So what about the negatives? There's always a couple of negatives. No peer-to-peer lending company is perfect, but I'd like to see the £10 minimum go away. We've been promised that by the end of this year that LoanPad will reduce those minimums to 1p, so there will be no more cash drag on the platform, so hopefully that will come. Slightly lower return rates if you do compare LoanPad to other peer-to-peer lending platforms. You will see that the risk to reward is lower, so you have lower risk, but you also have lower reward. There are peer-to-peer lending companies that offer greater return rates than LoanPad, but that's what you get for the low risk. So that's number 1 on my list as it stands. They've been number 1 for a long time because of what they offer, the product that they offer, and me having visited LoanPad several times, being extremely comfortable with the product that they offer and the people who are running the company. So let's continue on to number 2. Cufflink. They are continuing to hold that number 2 spot. And I would say it's a close race. There's not a ton of difference, I think, between number 2 and number 3 on the list. So it's kind of hard choosing number 2, but I picked Cufflink because, again, I've had a pretty long-standing relationship with them, despite Narinder Kaur leaving the company, which I should be getting more updates on that, I think, within the next week, hopefully, why that happened. But for now, Cufflink stays number 2 on my list. They've got a good deal flow, a lot of new loans that do come on the platform, at least historically. Again, will that continue? I don't know, but you could say they've had £400 million plus invested through the platform, so I predict that to continue. You can earn up to 10.26% per year. They have a bonus going on right now. In fact, let's take a look at those bonuses and see what they're offering. I think they have, let's see, what do they got? I think they have a couple of different offers right now. Come on, show me the offers. I want to see the deals. Let me see the deals. They had a table before. Let's log in here. But you can get up to 10.2%, I believe, on the 2-year. See, here we go. 1 year, you can get 9% gross per annum. That's a promo rate. 2 year, 10.26% or 9.78% gross per annum. I think this 10.26 is if you reinvest, use the monthly reinvestment interest. And then the 3 year, 8.51% or 7.87% gross per annum. Gross interest per annum. It says gross annual gross annual interest equivalent rate is the higher amount. So there you go. You can get pretty good. I mean, the 2 year rate's not bad, right? Personally, I would opt for the 1 year interest rate, even though there are some people that believe interest rates are actually going to go up because of what's going on in the economy. There's no way to predict this. So if you want to lock your money in, you can get that 10.26% on a 2 year auto lend product. That's a pretty good deal, you know? That's a pretty good deal. So let's continue. Hold on. Got to restart that slideshow. Okay. So earn up to 10.26% on Cufflink. Auto and self-select loans. If you want to pick out your own loans, you can. Personally, I'm into the set and forget, which is the auto loan. Auto lending, of course, you will not get paid until the end of the term, so keep that in mind. If you want to get paid more often, self-select is better. And they've recently reduced the investment minimums again back down to very, very small amounts. I was testing that out today just to see, because in there, frequently asked questions, it's still saying about these £1,000 and £500 minimums. So I thought, and I know on the account dashboard it says right here, minimum investment on £100. That's for the auto. But if you go to the select, and I thought, let me try to put some money in here and see. And I don't know if you can see this, but you probably can't. Let me see if I can zoom in whether it shows you. There you go. See that blue box right above my head? It says minimum investment amount £3.95. So that has really been reduced a lot, which is good. That was a smart move on Cufflink's part to go ahead and reduce that back down again. Good default recovery protocol. I think Cufflink's kind of always been good. They don't have the best default rates in the business, but they've been pretty good at keeping on top of the defaults and recovery if they need to. Let's look at the negatives. This is the biggest negative that I could see. 16% blended default rate in 2024. It's definitely higher than I would like to see for a company. And that considers to be more than 6% late on a loan. But they're predicting for 2025 that that rate will be 6.65%. I mean, defaults are always the biggest challenge when it comes to peer-to-peer lending. I was trying to see if I could find that loan statistics page. Let's go to portfolio statistics and take a look at what LoanPad has going on. This is not what I'm looking for. What am I looking for? Statistics right here down at the bottom if you ever want to find that. By the way, sometimes these statistics pages can be difficult to find, but if you're ever looking for Cufflink statistics, just go down to the bottom and it's not on this page, but oh, it is right there. Where is it? I just saw it. Under About Us, down here, statistics. If we go down to the default rate statistics, which is what everybody really cares about, right? Whether we're going to get our money back or not. This is the FCA's default definition of 180 days plus, so 6 calendar months. You can see the different years. 2024 was actually the worst year for Cufflink. You see here, A-rated loans, 19.75% default rate. B-rated, 10.33%, which is very interesting, right? How the B-rated loans were less. And then you had no C-rated loans in default. So blended down here, 16% in 2024. So almost double of the year from 2023, which is 8.77%. We'll hope for a better year for 2025. Obviously, we're not going to be able to tell yet because the year's not over. Now, Cufflink's default definition, this is 1 calendar month past a missed payment. Their default rate blended was 25.41% in 2024 and predicted 15.37% in 2025. So, of course, big difference between 1 month, which is extremely common in peer-to-peer lending. I mean, for loans to go 1 month past due is, obviously, you can see 1 in 4 Cufflink loans going past 1 month late. But FCA's definition is going to be 16% for 2024 and 6.65% estimated for 2025. So I'd say that was one of the bigger downsides for Cufflink. And then what else? Let me start the slideshow again. Clumsy UI, clumsy user interface. I think Cufflink does not have one of the best website interfaces to use. I've kind of found it a little bit confusing. If I don't log on very often, I get a little confused, but there's a lot going on. It's definitely gotten better over the years, but if you go to the dashboard page, there's a lot going on. You can see here, auto, select, marketplace, but far improved from where it was just a couple of years ago. It was a lot worse back then, and they've definitely cleaned it up. So that's okay. That's all right. It's getting better. But I would say that was definitely, I would consider it to be a bit of a negative compared to some of the other peer-to-peer lending websites. Peer-to-peer companies have always had a difficult time with user interfaces because some of them try to do too much on their websites. I think some of them are overly complicated. Cufflink is one that I think could use improvement. It's not terrible, but I think it could use some improvement for sure. All right, number 3, drum roll. Unbolted. Unbolted has slipped into our number 3 spot. It used to be some other company. I'm going to explain why they're not on the list anymore. Unbolted, of course, are UK. They call it luxury asset pawnbroking style peer-to-peer lending company. They also loans to businesses too. What do I like about them? Pawnbroking model, which I understand. My dad used to be involved in jewelry, so I understand that. And they lend against golden jewelry as well as small businesses. I don't get so excited about the business lending aspect, but I think Unbolted has really kept their business lending minimal and really focused more on the golden jewelry side and assets. Less cash drag for lower investors. So that means if you're a smaller investor, you're not trying to invest $100K, some huge amount. You're going to get your cash invested. That can vary. Sometimes I do see money sitting in the cash account waiting to be invested, but I don't think the cash drag is too bad. If you're trying to invest, £1,000, a couple of thousand, cash drag's okay. You can get up to 10.2% per year, so the interest rates are quite nice. Auto Lend makes it easy. You just set it and forget it. It's very simple. It's not a platform that I've had to really pay too much attention to. And there is also a constant rotation of cash due to shorter term loans, meaning if you're trying to get some of your money back, you don't have to wait too long. A lot of loans are getting redeemed. Sometimes loans are very short term, so it's easy to get money back if you need to. What about some of the negatives? Default rates, 8.3 which I think is very reasonable for a peer-to-peer lending company. So we've seen Cufflink at double that, 16%. So decent default rates. What don't I like? The website, I think it's lacking. For instance, there's no frequently asked question section, some place you can get information. There's bits of information on the website, but I think the website is definitely lacking. It has a very basic user interface, and it's certainly not a very advanced website. APR for borrowers, so interest rate the borrowers can pay, can be up to 67.1% a year. So one has to ask, is that ethical lending? For anybody that's bothered by that. And because of that, you've got these huge spreads. So if somebody is lending a asset for an entire year, you're getting paid 10.2% per year. The borrower is paying 67.1% per year. So massive spreads between what the borrowers are paying, what you're being paid as a lender for the risk that you're taking. And number 4, House Martin has been added to now the top 4 list of peer-to-peer lending. I don't have an emoji for them yet because technically I'm not invested with them, but I plan on making an investment with them shortly. But I do like House Martin. I thought long and hard about which companies should come onto this list, and I was a little bit split between Blend Network and House Martin. And the reason House Martin made it to the list is because I really like what they're doing. Had Peter Reed on the stream a couple of times if you want to watch the interviews. But properties are used by charities for vulnerable people, so there is a element of doing good with the product that they are offering. You can get up to about 7.77%. I think I saw one of the opportunities there per annum, so interest rates are okay. They're inflation-linked leases, so it means if inflation goes up 1%, some of those leases also go up 1%, which means you make more money on your investment. Downsides, and also I think going back, you have to put a lot of weight into that first thing. The property is being used for charities for vulnerable people. It's nice to know that if you are lending money, that it is going to be used for a good cause to house people who really need housing in the UK. I would say some of the negatives, it's a smaller company, so you don't have a huge loan portfolio. I think they have 100 plus properties, but certainly a smaller company. That can be good and bad. One wonders, do they have the strength to survive long term? But also they're streamlined, so it means their expenses are lower. So I think that might be actually a neutral point. 50% less loans originated in 2024 versus 2023. So is the growth there? I don't know. If you see 50% less loans year over year, 2023 to 2024, is that concerning? Most loans yield in the mid 6% range. I would say they're on the lower end of the spectrum when it comes to investor returns, so that could be seen as negative for what they offer and the risk you could be taking. I think the website can be confusing too. I've never really understood the bids and the offers and how that works. And I think if you're a new investor, that's going to be quite confusing. Let's see, maybe I can log in. Just take a quick look and show you what I'm talking about if anybody has not logged into House Martin and you're interested in taking a look. Let's have a look. Let me log in. This is the biggest complaint that I hear about House Martin. Can you see that okay? I think you can. That, this is what you're greeted in if you go into the dashboard and you want to buy investments. It can be quite confusing. You've got a buy order, a buy and a sell order here, buy, sell. It doesn't work like a standard peer-to-peer lending company. You can buy and sell pieces, and it works more like a stock and a share. how there's a bid and an offer, and I think that could become confusing for some people. Not a big fan of those types of systems. I think I prefer just buying a loan. You know what you're getting paid as far as your projected returns. And I don't like things where you could sell for premiums, where you could buy a share from someone else for more than what they paid for it. Not a big fan. So I consider that to be a bit of a negative, and that can be a bit confusing. So, no longer recommended. There is one company that used to be on the top 5 list that I can really say now that I can no longer recommend, and that is Crowd Property. They get the emoji. I don't know what's going on with them, but the default rates are really, really concerning. Now, 71% of my loan portfolio is overdue by 3 to 12 months. That's certainly a concerning thing about Crowd Property. And maybe this is something that they're going to sort out over time, but I really, in good conscience, cannot continue to say that I feel like I'm that comfortable with Crowd Property. I'm certainly not putting any more money as far as investing goes. I've been withdrawing as things are repaid back. I know they're doing a website UI user interface update soon, but I've always found the website to be very, very basic, very confusing. Probably one of my least favorite websites that I get to log into. I just think if you're new to peer-to-peer lending, you're going to have a really, really hard time understanding how this website works and how it operates. And when you log in, this is the first thing that you see, right? Your live projects. And you didn't even know how to get to the dashboard. There's no button. There's no button. Let me mute that. There's no button to get to the dashboard. You actually have to go in to click on your name. So I hope they really sort that out. I hope they can sort themselves out too with these defaults. Oh, hold on. I hope they can sort it out. So I've decided to remove them from the top 5 list. I think it's about time. And also, why is it a top 5 list? It used to be why is it a top 4 list? It used to be a top 5 list. It's still a top 5 list for anybody that downloads the document. But because we're talking about strictly peer-to-peer lending, LendingVest used to be on the list, and they're not peer-to-peer lending. So I thought for this top list, I would just take them off and just have strictly peer-to-peer lending companies. So there you have it. The I'm getting so confused. Top 4: LoanPad, Cufflink, Unbolted moves up a spot. And we have a new edition of Housemart again. And if I was going to add another company, it would likely be Blend. Unfortunately, there are some negatives about Blend Network too, cash drag being one. In fact, you got to put in £1,000 minimum on each loan. That's off-putting to a lot of people, so there's a little up in the air. I could also have added Easy Money. I think it's a pretty safe bet to add to the list. Possibly Propland. There's a lot of decent companies out there that are operating now. But I also try to keep it with companies that I personally invest through or I'm planning on investing through, and I don't invest through some of those companies, so can't in good conscience add them to the list. Hope you found that helpful. What else? Vanguard sent out another email. They must be panicking because they sent out an email saying staying steady when markets are turbulent. They want to keep you invested. We've seen the S&P index drop nearly 15% on the 9th of April, only to rebound 10% after tariffs. We'll pause there. They're telling you to keep calm. Stay in it for the long haul. Cufflink knows. Sorry, Cufflink. Vanguard knows how important that is. It says only about 6% of our clients traded at all over the past week, and a smallest percentage sold their investments, thus avoiding the trap of locking in losses. I find that a very interesting statistic because in order for the stock market to have dropped like it did, there must have been a lot of sellers. And question being is who was doing all the selling when the markets really dropped? Let's go to the mailbag. We're going to take a look at the Trading 212 portfolio. I'll show you what I've done over the last week with it. Did make a small trade, but let's go to this question that came in on the 14th of April. Hello, Lawrence with the W. I randomly stumbled upon your YouTube channel and website. I really like the information. Thank you. I'm 19 years old and I want to start investing. I have a goal to reach £5,000 within the next year. I asked my friends, but none of them are into saving money, so they weren't helpful. LOL. Laugh out loud for anybody who doesn't know what that means. Is there one share you could recommend I should look at to achieve my goal? Cheers, Aiden. Yes, one share. You want to buy one share. Well, let's go to the Trading 212 portfolio. I punched this into chat GPT actually to see what they would recommend. What that AI Microsoft, they said number one. They would recommend. ChatGPT said, if you only want to buy one stock, which would it buy? And they say Microsoft. They've shown strong financial performance with a 28% year-over-year growth in Azure cloud services and 165% in AI services growth. And then Pfizer, Netflix, Northrop Grumman, and Vanek Gold Miners ETF. Well, I don't know about those suggestions. So I said, you know what? If I only have enough money to buy one UK stock, what UK stock would I buy today? And ChatGPT says Rolls-Royce, GlaxoSmithKline, Marks & Spencer's as its three suggestions. It sounds like a financial advisor's suggestions. If you went to Charles Stanley with a bunch of money and said, Charles, Mr. Stanley, could you put together a stock portfolio? It seems like that are the kind of things that Charles Stanley would tell you to buy. Rolls-Royce, GlaxoSmithKline, Marks & Spencer. A little bit of BP. But as you know, of course, my answer to this question is very easy. And it will always be the same. Aiden, you should not buy one share. That's not a good idea. It's risky. Because if you get it wrong, like I have done in the Trading 212 portfolio many times, for example, Tesla, which I'm down 30%, you're not going to be a very happy camper. So, my answer always goes to this. The trusty old Vanguard US Equity Index Fund, which you can buy. I think you need a minimum of how much? £500. So you can definitely do it if you have £500. If not, I'll show you another alternative. But you can see here the price to own 3,550 stocks, all different shapes and sizes. The cost is £882.35 for one share. The performance has definitely stumbled as of recent. We've seen a high up to £947. So you can actually get this on a discount right now, more than 10% off its highs back on April 9th. Did it go any higher than that? Look at this. 993 pounds, I believe, was the high. So you can get it at a good discount. You can also buy this right here, the Vanguard S&P 500 share, which is VUAG, for a lot less money, £76, 23p. So if you want to get started with one share, you can do that. That would, and again, that is also discounted. I'm down about 9.86% total on that share. So very, very easy answer to your question of what share, Aiden. It would be simply that. Don't mess around with buying a single share. It's not easy to pick out the right share. Elon Musk is a great example of how a company can really get hit hard by stupid mistakes, stupid things that are said. Look at my NVIDIA, which was up, I think it was like 40-50% up, is now 1% up. Amazon down 10%. So this is the problem when you pick out stocks and shares. You pick out the wrong things, and you're not going to be very happy when you log in and see minus 29%. So stick with the index tracker. That's all you need. It's very easy. So you can see the portfolio here is improved a little bit right now. 24,325 pounds. Of course, our high was close to 30,000, so we're almost 20% off of the high where we were. Nothing has really changed as far as investments. I did add some more Vanguard S&P 500 VUAG. When did I buy the VUAG? I'm trying to get the rest of this 2,000 pounds in cash deployed into the portfolio. Where are we? Where's the history? I can't even find it now. Did they move it around? I'll have to go into the history up here. See what I did. 10th of April. So about a week ago. Oh, no, I didn't buy. I thought I bought. I've totally forgot to buy. Back on the 7th of April, we bought about 750 pounds worth of Vanguard S&P 500. Let's see what we paid. 72 pounds and 52p for a share. So got in at a bit of a discount, about 10% of a discount. So yeah. I mean, there's not really much to be done with the portfolio at the moment. Selling would mean selling for a loss. Doesn't make a lot of sense. I think markets are just going to bounce around until this tariff situation is sorted out. I wouldn't be surprised if we have sort of a flat 3 months, 3 to 6 months of nothing really happening, and the market's just going up and down, up and down. It's a good time to accumulate when things are not really moving. You can buy on those red days if you have extra cash sitting around. But the portfolio has recovered somewhat. We were down here, 22,152 on April 8th. So it has recovered about 10% since then. So not bad. Just sit on the hands and do nothing at the moment. Maybe buy if there's an opportunity. But you can see the last 3 months right here, minus 5,864 pounds. So we're down 20% in the last 3 months. Just the way it is. But in general, if we look at max here, we're still way in the green, 278% in the green. Another mailbag letter. Here we go. This is on the 12th of April. Is it too late? Titled, Hi Lawrence, I'm interested in buying some Bitcoin. The price has gone up so much. Do you think I'm too late to invest at this point? Thanks for any insight. Best wishes, Tomas. Tomas? Yeah, I mean, this is just a question that gets asked so often. Am I too late? You know, honestly, the answer is who knows. I have no idea what the price of Bitcoin is going to do. No, neither does anyone else. But historically, when they say, when in doubt, you zoom out. So we've had huge peaks and valleys. Historically, the price of Bitcoin has done well over the last year. Still up from where it was a year ago at 61,280 US dollars. So over 23,000 in increases, still from its high of 106,000. So a good discount if you are interested in buying it. I did see a report that came out that just goes to show you we don't know what the price is going to be, but there are reports. Here is one of those reports. Says, I'll zoom in so you can see this. Bullish, a peer-reviewed study forecasts 1 million pound Bitcoin, 1 million US dollar Bitcoin by early 2027 and 5 million by 2031. These reports come out a lot. Do I think there's any validity to them? Sure, there could be, but again, not really sure. This was from the Journal of Financial and Risk Management. Not sure what that is, but it says that because of the withdrawal that are going on of the supply of Bitcoin. That they predict almost could be $2 million US by late 2027, 5 million by early 2031. So my answer to this is you really need to study what Bitcoin is. If you have questions like, is it too late? I don't have an answer for you. I do know that inflation is a problem. Cash is a problem. Whenever you're dealing with inflation and a unlimited supply of money, it's very basic. More money can be printed. Inflation can go up and down. But things are getting more expensive. I mean, go try to buy a car nowadays and see how much cars have gone up in the last 2 or 3 years. So with the value of your pound going down, but they can print more pounds, it makes sense you want to try to put your money into investments that increase in value. So a lot of people think Bitcoin is one of those investments. So personally, I think it's a fine time to buy. Again, do your own research, not financial advice. I think it's fine. Sure, is it better to buy it when it's cheaper? Of course. But it's like the stock market. People who waited when the markets were down 15% a couple of weeks ago were thinking it was going to crash and go down more, and they waited and didn't get in at all, missed their opportunity. It's the same with Bitcoin. You don't know what the price is going to be. If you believe in the vehicle, invest in it. If you don't. Simple. I don't have any price predictions because I don't know. I think this study could be accurate. I certainly think $1 million US for Bitcoin is achievable within the next, 2025, 2 years, 2 or 3 years? Sure. Demand and supply. The supply is reducing. If the demand increases, prices go up. So, yeah. Do I think it's a good time? Sure, I think it's a fine time, but you could also wait till you get another pullback and the price goes into the 70,000 US dollar range. So that would be my advice to you, but it's not financial advice. It's just my opinion. Certainly could be wrong. I think that's all I got for you today. Yeah, it was an interesting week on the markets. Let's have a look. See if you have any interesting comments. Did you like the top 4 list? Does your top 4 list compare with my top 4 list? Richard McDougall says Cufflink performs pretty well overall. Rates around 30% defaults in auto invest. However, it's fine if they get repaid and seem to do so. Agreed. Yes, no crocodiles in sight. There's no water back there. I've never seen an alligator back there. Hi, Stephen Hale in Nottingham. Nice to see you. There are no flowers in the garden. Yeah, it's not really a garden back there. It's just it's a retention area for when it rains, the water goes back there. So just a bunch of grass. It's not really a garden. I'll show you again so you can see. Hang on. Let's take another look. You can see down there is pipes that run into that area right over there and back there. Sometimes you see some wildlife. But somebody's getting their doors painted. See? Live and direct. No flowers on a backyard golf course in Florida. Definitely not a golf course. If this was a golf course, I'd be certainly on the wrong side of it because you never want to be on the right side of a golf course. That's where all the bad golfers slice the ball to the right. Propland profits are down a lot, down 70%. Okay. Maybe that's why they didn't make the top 4 list. Not keen on putting too much into Cufflink Auto Invest. Higher risk. Okay. Peter Vince says he finds House Martin's website confusing. There is masses of data available, but I find interpreting it hard work. If you factor in medium or long-term potential property price increases, then returns could be quite good. Yeah, sure. Invest22 says, since Mike Bristow left, I've lost confidence with crowd property. And I would add Axia Funder to your list. Okay. Yeah. So we'll see if crowd property's new CEO can sort out issues over there. Don't ask Chat GPT if to invest in crowd property. We should do that. We should do that. Hi, Mike Powell. Yes, you are late. Crowd property was definitely on top of mine. They were number one on my list. No, that's not true at all. History is on the menu, 3 dots at the top. Trading 212, thank you. Somo, yes, they didn't make the list. Because of the £5,000 minimum investment. Alan says he'd rate Capital Rise above Blend. Interesting, okay. Is the top 4 actually peer-to-peer? Yes, they were this week. They were actually all peer-to-peer. You have to rewatch the stream, Mike, to see. Well, listen, it is almost, what time is it? 8:23 p.m. You're probably all going to get your beans on toast, so I'm going to let you go. Hope you enjoyed the stream. I'll be back next Thursday, all being well. And then, we got a couple more streams left before I take the summer holidays off. And I'll leave you with a little view of the outside for the end stream. So thanks for joining. Again, hit the thumbs up if you can. Thanks for joining. Subscribe to the channel. Tell everybody you know about the stream. Get them on here. Let's get everybody financially educated. That's all I got for you this week. Thanks again. Much love to everybody. Have a great week and a great weekend. See you soon. Take care. Bye.